Today, we will look at how to build high time frame bias and then sniper scalping with 1-minute charts. We will do a top-down analysis starting from weekly. After all that, we will focus on 30 minutes, 15 minutes, 5 minutes, and finally the 1-minute charts. This will be an extremely detailed trading video. Hope you do not miss it. If you're ready, let's start. Welcome our free trading course, all about price action trading strategies and smart money concepts. If you love scalping and day trading or even swing trading and looking for special trading strategies, check out my free trading course. You can find the links on Google Drive or directly from my website, which is in the description. Let's talk about how to build a bias from high time frames and go down and down up to 1-minute candlesticks to find sniper scalping entries within a session. Most professional traders start their way by analyzing monthly or weekly charts. If I want to make a full top-down analysis, I generally prefer weekly charts as my starting point. I want you to notice this weekly imbalance. This is an important fair value gap, but why? First of all, it collides with this weekly order block, which makes it quite effective. And if you look to your left, you can see that this is a pretty much support and resistance flip area. Let's have a closer look with the 1-day time frame. Now, I want you to notice this multiple green candlesticks. This is our daily order block series. As you can see, the weekly and the daily order blocks do not exactly match. By going from higher time frames to lower time frames, we are making more and more precise key point identification. Okay, we checked weekly and daily. Now going down to the 4-hour time frame, where the price exactly reacted from. What do you see on the screen? What kind of pattern? Can you identify it? First of all, notice the hourly range here and the extreme deviation which is hitting the daily order block. The hunt for liquidity is quite obvious. I want you to notice the market structure break inside the order block. Okay, let us focus on the pattern. Remember, I have told you probably 100 times. A set of liquidity is always forming right above or below key structures for final manipulation. So the accumulation phase, the manipulation phase, and finally the expansion phase. 99% of the time this happens right around the high time frame supply demand area or after a high time frame liquidity sweep. So what is the bias then? Once the daily order block hit, after the liquidity sweep and the market structure shift confirmed, this area will be the expansion phase. This was the area that we should have kept shorting, looking for scalping trade setups. Let us focus on New York sessions in this area. Check this New York opening with the 30-minute chart first. Remember, we are in the expansion phase. Bitcoin is going down. Our bias is bearish. Price makes a break of structures with a clear breaker block zone. Let's talk about the secrets of breaker block trading. I switched the 1 minute to focus on the New York opening session. This giant red area is 30-minute breaker block. Notice the imbalance here. Here is the key point of trading with higher time frame order blocks, breaker blocks, or mitigation blocks. Finding low time frame imbalance inside the high time frame structures. These are extremely powerful reaction points. Notice this liquidity forming up before the New York opening. As a target, these clear equal lows with combined imbalance are my number one targets. Check this market structure shift here. This is a perfect textbook setup. Price gives us a clear imbalance to enter, My stop loss is large against a possible pullback. This is a clear setup, a very basic New York opening with 1 minute scalping. We are still in the expansion phase, remember, mostly looking for short setups. Another New York opening trade setup. First of all, notice the liquidity gathering before New York opens one more time. This is another key of trading. Identifying the liquidity forming before 9:30 a.m. and waiting for the hunt and structure shift. Notice the strong hunt here, clearing both equal highs. But this is not enough. A sweep of liquidity is just a little part of the equation. We need a structure shift to confirm the micro trend change. And in this case, it is extremely clear, as you can see. Without a proper target, no need to look for an entry. The closest target is obviously this imbalance and the small trend lines below for possible runners. Let's zoom into the action. Notice this lovely breaker block zone. I think this setup is crystal clear. Not much to talk about it. As for precise entry points, you can focus on the imbalance and balanced price ranges. Price also pulls back into the premium zone, double confirming our entry. Now the problem in this example is the target. I have two options. If I aim for the imbalance, I must have a tighter stop loss. Otherwise, the risk-reward ratio will be meaningless. If I use a larger stop loss, this imbalance can only be my partial profits. And the reason for moving the stop to break even and targeting deep liquidity zones. This is why I keep saying there is no fixed entry, target, or stop loss. It always changes from chart to chart. And the weekend. I was on holiday on the weekend, so I did not trade so much, just a couple of short trades. However, this weekend was a gem with lots of clear trading setups. Checking the 15 minutes. Notice this considerable swing failure pattern, which ignited the extreme sell movement. Price pulls back into the disimbalance. And remember again, imbalances are 10 times more efficient and useful if they collide with order blocks. Price sweeps the liquidity and makes another structural shift at this point. Okay, now how to enter this? There are two ways. A casual entry or a precise sniper entry. But first, I want you to notice this break. Notice the power and the quality. When I see this, I become much more confident in my trades. This is actually my classic Bitcoin setup. I have taken these trades like 1,000 times already. Price sweeps this internal liquidity and fully fills the imbalance, creating internal inducement, and then taps the order block. How about the target? Do I even need to tell you? Anyone who has completed my free trading course can take this trade blindfolded. The liquidity and imbalance are below. This should be your casual entry style. This is the 5-minute chart, a very relaxed trading model. Let's clear the entry and check the chart within 1 minute. Same chart, but with 1 minute. Instead of a casual entry, can you snipe this? Check this area out, which we made a casual 5-minute entry before. Notice the 1 minute structure shift. Notice the pullback and the imbalance. Now, this is a sniper, true sniper scalping. However, to do this, you have to sit in front of the computer all day long and make an entry. The cost is waiting time. As you can see, trading is all about choices. You can be a sniper scalper or a casual day trader. All about your choices. Okay, folks, another adventure ends here. As always, all these trading methods are suitable for scalping, day trading, or even swing trading. I believe that it will be really helpful in your trading life. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon.